From a life on your own to a family of your own. From small passions to huge successes. From the saddest endings to happier beginnings. From walking her to school to walking her down the aisle. Whatever change, one thing that's constant is home. Celebrating 30 years of life moments. Avita.
Hey, this is Jay, and welcome to the latest episode of Finance Fridays, a weekly program where I interview entrepreneurs, personal finance personalities, and purpose-driven individuals from different parts of the world to talk about their stories and mindset to help you prosper with a purpose. We are streaming live on YouTube, Facebook, and LinkedIn. And this episode will also be available on my Pera and Purpose podcast on Anchor, Spotify, and Apple Podcast. If you're new to my channel, please like, share, and subscribe to Purpose Driven Finance on Facebook, YouTube, and connect with me on LinkedIn. And of course, a huge thanks to our regular viewers out there. Thank you so much for the 5 million viewers who's watching right now. And I'm really excited for this interview because I really wanted to have him in the program, and this is something that's not very common to many Filipinos. But before we start, I just want to give a huge shout out to Ayalalan Middle East and GoHunter.com for supporting my advocacy on financial literacy. So guys, I have a quick question. Will you trust a robot or an AI to handle your finances? Well, why not? Because for the past couple of months, I've been investing in a Robo-Advisor because of its simplicity, ease of use, and most importantly, its low management costs. With a growing popularity, a question begs to be answered. Are Robo-Advisors better than traditional human financial advisors that we are so used to? So, to help me find the answer, I have invited Michele Ferrario, the CEO and founder of StashAway. Because in January of this year, StashAway became the first digital wealth manager in Southeast Asia to manage more than 1 billion US dollars. And early this week, they have raised $25 million in Series D funding led by Sequoia Capital India. This only goes to show how promising the company is and the entire robo industry in general. So prior to StashAway, Michele was also the former CEO of Zalora Group and the co-founder of Rocket Internet in Italy and Pakistan. So to talk more about the rise of the Robo-Advisors, let us all welcome Mr. Michele Ferrario. Woohoo!
Thank you, Jay. This is a better welcome than I was expecting. Thank you. I appreciate it.
Hi, Michele. How's everything doing? You are in Malta, and thank you so much once again for giving me your time
Thank you.
to talk about this topic that I'm really wanting to share to many Filipinos, not just in Dubai, but also in the Philippines and other parts of the world.
Thank you. Thank you for having me. I'm super happy to try to be helpful and try to talk a little bit about money, managing their personal finances, and what a company like StashAway can or cannot do for your audience.
All right, perfect. Now, before anything else, let's just greet some of our audience here, and I'd like to thank them for investing their time tonight as well. So, if you have any questions later on, just put that on the comment section, and Michele will definitely answer all your questions. So, Michele, I want to get straight to the to the topic. And what is Robo-Advisory, and why should people consider using one?
So what people usually call robo-advisors are online platforms that help people invest their savings into what is usually a diversified portfolios. Now, I'm not a fan of the term robo-advisor. In fact, if you ask me what is StashAway, I would tell you it's a digital wealth manager. And the reason is that I think the term robo-advisor is a little bit misleading, meaning that, as you mentioned in the introduction, you'd imagine a kind of completely robotic experience. And actually, at StashAway, we do quite the opposite. I'll give you an example. If you are in Dubai or in Singapore, so we are in a few countries. We're live in Singapore, in Malaysia, in Hong Kong, and in Dubai. And as you mentioned, we launched in Dubai only a few months ago. So if you are a client in Singapore or in Dubai, and you want to talk to our team, you can call our phone number and we pick up the phone in less than 8 seconds. You can WhatsApp us. There is a link embedded in our app where you can actually talk to somebody, and that somebody is a human. So what I'm saying is the word robo might be a bit misleading. There is actually a lot of human interaction with a lot of human work behind what we do. But short answer to your question, it's a platform that helps people manage their investments in then depending on the platform, what we do, I think it's in the right way. So in diversifying the portfolios, dollar cost averaging, and we can go into the details of what that means, and making sure you actually take the right risk level.
Okay. Now, StashAway is very different from the typical robo, but I just want to use the word Robo-Advisory because that's the main subject for tonight. Now, what are the usual strengths and the weaknesses of such technology during this time?
Look, the strengths of a systematic approach to investing, which is what we do and what most robo-advisors will do, is that you take away human biases. So I'll give you an example. As people that follow the markets will probably know that a year ago, in March last year, markets crashed dramatically, driven by the start of the pandemic, obviously. And for any human, around mid-March last year, would have been very difficult not to have the pulse to sell and get out of the markets because everything was just falling like there's no tomorrow.
True.
And that would have been the stupidest decision you could possibly make at that time. But it was the natural thing that you would do if you are a human and every day you look at your portfolio and say, oh, look, minus 5% from yesterday. And then you look again the next day, oh, another minus 5%. Oh, another minus 5%. So it's very difficult to be kind of to keep the helm stable in those times. The advantage of using a systematic approach, which means you define a set of rules when things are quiet and you do it in a rational, analytical, intelligent way. And then when everything moves, you just follow those rules and try to make sure you don't change that. That actually helps. So for instance, our clients have made very good returns in 2020. And they've made very good returns because we didn't move as the markets were crashing, and we actually were able to get the full rebound, and then we actually changed the portfolios after the full rebound to actually take advantage of what would happen next. And we did it because we were just following the data and the system that we've built using analytical intelligence and experience in building those rules. So short answer to your question, there is a gigantic benefit in being system-driven, being systematic, and kind of setting up certain rules and actually make it happen over time. So that's one. Secondly, because a platform like StashAway makes it very easy to invest perhaps on a monthly basis because there's no minimum balance. So you can start with $100 and you can invest $100 a month. Or, if you have $1 million a month, good for you. You can also invest $1 million a month. But, there is no minimum, no maximum. Even with $100 a month, you actually get a diversified portfolio. You always have access to the information through an app on your phone in a couple of clicks. So that convenience makes it possible for people to be systematic, not just in their investments or once they've invested, but also in the investment process. And investing on a monthly basis actually has long-term advantages in terms of kind of a risk-return profile, because you don't risk investing on the wrong day if you invest every month. You're not timing the market, which is always very difficult. So maybe two major advantages. One is the ability to follow investing rules and therefore take away your personal biases, which will be there. And secondly, enabling you to actually invest in a convenient fashion and therefore do it also systematic from an investment perspective. maybe the last point I would make is cost. So investing is one of those very few industries where actually there is not a positive correlation between how much you pay and what you get. If you buy a car, usually a more expensive car will be better than a less expensive car. Usually, not always, but on average. While for investing, price is actually part of the product because you are actually buying returns. And every 1% more in fees you're paying is 1% less in returns. And so just mathematically. And therefore, if you actually are able to keep fees under control without looking at the last 0.1%, but making sure you don't spend 1 or 1.5 or 2% more than you should, actually you end up improving your return significantly. And so, for instance, in our case, we charge between 0.2 and 0.8% per annum, while average cost of investing through a bank in Singapore and Dubai is something between like 2 and 4% per annum. That difference is gigantic. That 1 to 2% less in fees every year, it's a gigantic impact, has a gigantic impact on your long-term wealth.
That's so true. You know what? I've been also discussing about behavioral finance, and like one that you mentioned, one of the benefits is that it removes the human's biases in terms of investing, because many investors would pull out their investments when the market is dipping, even if they understand even if they understand personal finance and they know that they should buy low and sell high. But when that situation happens, like a market crash that happened last year, majority of the investors pulled out their money, and that's when they would encounter so many losses. And what I like about what you said as well is that it allows the investor to automate his or her investments to make sure that dollar cost averaging is applied. And like what you also mentioned, I mean, everything that you mentioned are the things that are in line with my investment discipline, like low cost investing through index funds, dollar cost averaging. It's everything that I really wanted for a particular type of investment. And that is why I want to share this to as many people as I can, because I know how beneficial it is to have an investment platform that doesn't charge too much. Because in the Philippines, by the way, just to give you an idea, the usual cost for managing a fund is like 2% at the bare minimum, and there are some funds that would charge for like 5%. And in other parts of the world, there are 7% and above. So
That's
imagine how
crazy.
much.
That's just purely crazy.
And if the market's average return is 7%, then guess what? How much more are you are you gonna gain out of that, right?
No, absolutely. And look, you mentioned that what I mentioned. So, dollar cost averaging, diversification, low cost are all things that are close to your heart or to your investing heart. And
Yes.
to be honest, this is why 4.5 years ago, I decided to found a company with me and my two co-founders, Nino and Freddie. I was in Singapore. As you mentioned earlier, I was the CEO of Zalora. I had savings and I was trying to do what I thought was best for my money. And I realized that there was nobody that was offering those three things: the ability to diversify easily, the ability to dollar cost average easily, and the ability to actually reduce my investment cost. And that's why I started to build StashAway. It looks like Jay left. So I guess I'm going to entertain you guys for a second until Jay is back. And actually, it looks like he's coming back. It's loading. I can keep going as Jay comes back. As I mentioned, it's very important for anybody that manages money, and this is true for people that have millions of dollars and people that have hundreds of dollars. It's true across the board, and it's very important for everyone to just set up a plan, be disciplined about it, be systematic about it. So, Jay, sorry, I saw you were out, so I was filling the gap, just talking about the importance of what you mentioned, discipline, right? The importance of investing in a disciplined way, which means having a clear path to building your wealth. So you can save, I don't know, $300 a month, great. $3,000 a month, even better. $30,000 a month, even better. Whatever the amount might be, that, and then every month you invest that amount, you save that money, and you invest it in a diversified portfolio, and you do it every month. You don't look at the market. The market may be up, down, left, or right. It doesn't matter. You just do it. Ideally, you have a standing instruction that does it automatically, so you don't even have the pulse to decide whether to do it or not. It just happens automatically. 20 years later, you're going to look back and pat yourself on the shoulder and say, good job. And that's, to me, absolutely the key to, and this is how I think about my money, which is how we built, why we built StashAway this way. I'll stop and give it back to you. Sorry.
Yeah, sorry, I got disconnected a couple of minutes back. Man, my internet. Well, like what you said, all the disciplines that you're using are the same kinds of discipline that I also practice and also teach to many people. Just get yourself invested in the market, and don't do anything. Just stand there, as what I've read. If the market is crashing, just stay in your goals and make sure that you are continuously investing. And what I love about StashAway and also other robo advisory firms that I've seen is that the global diversification is there. And when you invest a little portion of your money, instantly you are diversified, which is great for your investments. It lowers the risks, and the exposure to global markets are already there. Because if a usual Filipino would be investing purely in the Philippines, I mean, as I have read, it would be better to also be exposed globally, because the performance are better versus in our local home country. And like what Alan has mentioned here in the comment section. By the way, Alan is the one who introduced me to StashAway. So shout out to Alan. And he said that StashAway's rate of return in 2020 is 21.90% for its risk index at 100% equity. So later on, I'll be asking you more about some of the specific things about StashAway. And here's one of the top questions that I've been thinking. Can robo advisors really perform better than the usual actively managed funds? And can they beat the index?
Yeah, so look, let me make a step back. So when you invest, there are two steps of investing. The first one is what is called asset allocation. And the second one is what is called security selection. So in practice, what it means, let's say I have $1,000. The first step is deciding of my $1,000, how much I want to invest in US equities. So shares of companies traded in the United States, Apple, General Motors, General Electric, Amazon, and whatever. And then I need to decide how much to invest in Chinese companies, Alibaba, Tencent, JD, whatever. And then I want to decide how much I invest in shares in European company, Volkswagen, et cetera, et cetera, et cetera. And then I also want to decide how much I invest in gold, how much I invest in long-term U.S. government bonds. Bonds issued by the government or the U.S., or how much I want to invest in short-term bonds from, the U.S. or somewhere else, et cetera, et cetera, et cetera. So this process is asset allocation. Once you have decided that you want to invest 10% of your assets in U.S. equities, let's call it, again, Apple, Amazon, etc. Then you go to the second step, which is security selection. So now you have $100. How much of these $100 you invest in Apple? How much in Amazon? How much in Coca-Cola? How much in General Motors, etc., etc., etc. Everybody always talks about the second part, like picking stocks, because it's sexier, it's fun. It's something that people like to talk about because I can say I beat the market. Yes. But in reality, more than 80%, 80, of the difference in returns between different portfolios actually comes from asset allocation. So the first part of the process is much more important than the second one. Therefore, so the reason I'm saying this is that I want to answer your question specifically. So your question is, can a robo-advisor beat an actively managed fund? Now, let me talk about StashAway specifically. Now, at StashAway, we do not do security selection. What we do is, for each asset class, US equities, we buy the whole market. We buy everything. So, for instance, for US equities large cap, which in practice means the 500 largest companies traded in the United States, we buy an ETF, which is a fund that actually tracks an index, and we buy the one that tracks the S&P 500, which in practice means that if the index of the 500 largest company in the US goes up by 2%, that ETF also goes up by 2%, If it goes down by 2%, then ETF goes also down by 2%. So in practice, we track the market. We don't overperform, we don't underperform from a security selection perspective. Where we put intelligence is on the first step, on the asset allocation side. That's where we decide whether to increase or decrease over time your allocation to a specific asset class, being it US equities, gold, long-term bonds, short-term bonds, corporate bonds, government bonds, China, Europe, Japan, whatever. So geographical, etc. And this is where the money comes from. Now, in your example, actively managed funds do security selection. So what they do is that they compete with ETF. So they usually are dedicated to one asset class. So you have an actively managed fund that invests in US equities, and their job is every day to decide whether to buy Apple, Amazon, General Motors, etc. Now, if you look at data, you can go look it up yourself. If you go to spiva.com, spiva.com, you'll actually find the data. In the last 15 years, around one fund in 20, so 5% only, have beaten the index. Only 1 in 20. And that's why we don't bother doing security selection, because it's impossible to beat the index constantly over time. In the last 15 years, only 1 in 20. Are you so lucky to get the right one fund manager and not the 19 that actually don't beat the index? So our point of view is very clear. Don't spend time on security selection, buy ETFs, and actually spend time on the asset allocation side. And that's why Stashaway is built that way.
Yeah, and I love looking at Spiva. I think 2 or 3 days ago, I was looking at it again because I was speaking to one guy who's actively trading, and I told him that, okay, if you can beat the index, then good for you. But I'd still go for index investing because the actively managed funds, if it's showing here on the screen, right? See, it's only 24% outperforms the S&P 500.
And this is if you look at 5 years. This is if you look at 5 years.
Yeah,
if you look at a longer term, if you look at 15 years, actually the number, you need to read the actual document. The numbers are actually larger. It's 90-something percent. And that's even worse. What you want is consistent performance over time. What this means is that because over time the number gets higher, it means that it's very inconsistent. Some funds are better 1 year, some other funds are better another year. Overall, no funds are better over the long term. That's why ETFs are becoming so popular.
True. And not to mention the costs involved in those actively managed funds.
Of course.
So now, before we go into our break and talk more about specifically on StashAway, do you think robo-advisors will eventually replace human advisors?
I think there are a lot of activities that are better done in a systematic fashion, so let's call it by a computer, than with a human. And asset allocation is one of them, because as I mentioned, you take away the human bias. Security selection seems to be the same. That's the difference between index tracking and an actively managed fund in practice. So yes, there are areas where I think they're not going to replace completely, but I think they're going to be, kind of a technologically driven investing will actually be a very significant part of the market. Now, there are other areas where you need, you can benefit from a human advisor. And this is when your needs become more complex, when you have maybe tens of millions of dollars, or $10 million or more, and then you have issues with legacy planning, and you have issue with tax planning because you have money spread across very different countries. So those are things that are difficult to automate because they are so specific to one individual and one situation or one family that it's difficult. It doesn't make sense to automate. But for kind of the average investor, so somebody that has anywhere between $10 and $10 million, I think most of their needs can be really served with kind of a systematic approach. At StashAway, what we do is we offer to everyone with $0 minimum balance a systematic approach to investing. If you are an accredited investor in Singapore or in a professional investor in Dubai, etc., you actually get also access to a wealth advisor, and that wealth advisor will try to help you with those kind of a plan. What I just mentioned. Thinking about the more complex financial planning. That maybe because it's unique to you, because you might have a lot of money spread across different places, and it's more difficult to actually track it in a simply systematic way.
Yeah, and I think professional. I think I would say professional and the fee-based advisors. Okay, sorry. The fiduciary advisors can really use platforms like StashAway to easily guide retail investors or even savvy investors. And what I'm thinking here is that it. I mean, this would replace the traditional actively managed funds in the. Well, I think that's what I really want in the future, because those actively managed funds are really just eating the returns of the usual returns of many investors. So I think this can be a good way to improve the performance of the funds, or at least go hand in hand with a human advisor. And I forgot to ask you a while ago that are um are robo advisors mainly used by retail investors, or can also be used by high net worth individuals? Because I think I've read in an article that 20% of your clients are high net worth, and the rest would be the average ones.
Yeah, correct. So we go very broad in terms of type of clients. As you mentioned, 20% of our assets come from what I call accredited investors, so people that have more than a couple of $1 million in personal wealth. The core of our clients are affluent, so people that have kind of somewhere between a couple of $100,000 and a couple of $1 million. That's where the core of our assets come from. But because we have a $0 minimum balance, we also help a lot of people that are more retail, especially younger people that are just starting out, that are kind of first job, second job, and they are kind of starting out. So the platform is quite flexible in that sense.
Nice. I mean, I think it's the first platform where I see zero maintaining balance and easy diversification of funds. Well, later on, I'll talk to you more about it. And before we go ahead, let us just go for a quick break. And guys, if you have any questions regarding StashAway, Robo-Advisory, and anything that Michele can help us out, just please put that there. Put it there in the comment section. And before anything else, let's just have a quick break.
As city living turns more quickly, the need to always be in step with the daily rush has become ever more important. A need that developer Avida Land has chosen to take head-on with their newest development, Avida Towers Verge. Located in Mandaluyong City, Avida Towers Verge gives its residents unparalleled access to key places in the metro. It banners the ideas of access and convergence to make sure that its residents are never too far away from the things that count. Also worth noting is the fact that Mandaluyong is one of the best places at the moment to invest in property, with values continuing to rise due to high consumer demand, making Avida Towers Verge a very worthy investment.
For almost 3 decades, Avida has been providing thoughtfully designed homes in secure communities. And with proximity becoming more and more essential in modern living, they have listened once again with the unmatched location and value proposition of Avida Towers Verge. So now, residents won't ever fear that they are missing out on anything again.
And we're back. I'm still Ferrario, CEO and co-founder of StashAway. And by the way, this episode is brought to us by Ayala Land Middle East. And thank you so much for supporting my advocacy on financial literacy. So let's check the comment section, because there are some guys who's watching today. Aris from Italy is watching. Hello, everyone. Hi, bro. Thank you so much. And Kring Kring Chesumission says that great customer service from StashAway. I think
Thank you, Kring Kring.
Days back.
Thank you.
And Alan said, can't wait for StashAway to be in the Philippines. And later on, we'll answer that question, brother, if they'll be in the Philippines anytime soon. And Mayan said, she said hello. And by the way, Joseph of StashAway in Dubai, thank you so much, brother, for connecting me to Michele. Such a huge help. And we still have plans later on to expand the introduction of StashAway to many Filipinos. So, Michele, just a quick question as well. Let me just go and get that one. And I just want to ask some of the specific services of StashAway, because I'm putting my emergency fund on StashAway Simple, and you also have this SRI. And as I've also read, majority of the typical robo-advisors are using the modern portfolio theory as their investment discipline. But for StashAway, you're using ERAA. It's the first time that I've heard it. It's economic regime-based asset allocation. So how can you explain all these services to a 5-year-old or 7-year-old kid who's new to
So
this thing?
I do have 3 kids. One is 7, one is 5, and one is 1. So I'll try to think that I'm talking to my 2 eldest. Now, jokes aside, let me unpack. You actually asked quite a few questions. So first of all, our products, we kind of have 2 products really. One is called StashAway Simple. You mentioned it. That's a cash management product. What it means is that it's a way to manage your cash. Is incredibly low risk, as close to no risk as it gets. And depending on the country or where you invest, it invests in the local currency and therefore gives slightly different interest rate. In Singapore, it's 1.2%. In Dubai, actually, I think it's also 1.2%. I'm actually not 100% sure right now. And one, in Singapore is in Singapore dollars. Obviously, in Dubai is in dirhams, and obviously US dollar, given that the 2 currencies are pegged. Now, as you mentioned, then our core products are a range of portfolios at different risk level. And we talk about what you call SRI, StashAway Risk Index. Now, we talk a lot about risk. Why? Because unfortunately, in investing in the industry, a lot of people always talk about returns. Yes. And returns are obviously what you're trying to get, but you cannot talk about returns without talking about risk. You always need to talk about the 2 things at the same time, which is why when you log into the platform in StashAway, and when you start picking the portfolio you think is right for you, we talk about risk first. Let me go back to what you said earlier. Earlier, you said that a lot of people that when the markets crash, they get out and they lose money because they sell when things kind of go south. And that's why picking the right risk level is so important. You need to pick a risk level that you're able to live with through the ups and downs. You are better off taking a little bit of less risk, which means probably slightly lower returns over time, over a long time. But if that allows you to stay invested through the ups and downs of the market, and there will be ups and downs. Remember, let's say you are in your 30s, you're probably 30 years away from retirement. In 30 years, you'll go through 4 or 5 bear markets. You're going to go through 20, 25, 30 corrections. So a bear market is when the markets crash by more than 20%. Correction is between 10 and 20%. So this is going to happen a lot of times. You need to know that that's going to happen. You need to be prepared for it. And you need to have chosen the right risk level that lets you go through this period. Because the worst thing you can do is sell when the markets go down. You don't want to do that, right? You need to stay invested and actually keep investing when the markets go down. So, sorry, a little bit of a long introduction to just say that risk is at the core of every investment strategy, and you need to think about risk first. Now, on StashAway, as mentioned, we have 12 portfolios at different level of risk. They go from a StashAway risk index or SRI of 6.5%. Up to 36%. So it's 6.5, 8, 12, etc., up to 36. What does that 6.5 or 20 or 36% mean? Is that, let's say 20%. In a given period, you have a 1% probability of losing more than 20%. So every 100 years, you can say, there's 1 year where that portfolio will lose more than 20% in a specific period, which is kind of, last year we went through a 1 in a 100 years type of event, where the markets crashed significantly, and our portfolios held on their StashAway risk index. So, the 16% SRI lost in the month where the markets went down, lost less than 16%. Now, in the following month and a half, actually more than recovered. So if you look at a kind of 3-4 months period, actually, it made profit. And as I think a client of a viewer earlier posted our 2020 full year returns for our higher risk portfolio. Yeah, that's the highest risk portfolio. So this is the higher risk portfolio. Last year did close to 22%. Wow. In around March, it went down. I don't remember the exact number, but not too far away from 36%, like 30 something percent. So that's why it's so important you stay invested, because if you sell them, you don't get the upside. and so you need a little bit of faith. So, or kind of, you need to believe. You need to sleep at night. You need to have a portfolio that doesn't make you lose sleep. So that's what Stashaway Risk Index is. It's a measure. It's an actual measure of risk, and you need to really be very comfortable with the number you choose, and take the right risk level. Now, if you want to know more about this, on the Stashaway app, so you can download the app for free. You don't need to invest any money. This is something you can do anyway. There is a tab called Academy. You can click on it, and there is a bunch of videos that are pre-recorded, very curated, where actually starting from very basic information, financial planning and investing, going to fairly sophisticated, where you actually can watch snippets of pure educational content. It's non-commercial. We don't talk about Stashaway. We just try to teach people the basics of financial planning and investing. And we talk about risk extensively. So if what I just said doesn't make sense to you, please go to the app, open the app, and I think there is probably explained better. And you'll see my face in the app as Jay is showing. And there is quite a few different courses. Start from the beginners one, and you can go up. Again, it's free. Just download the app. It's there. You don't need to invest. You can simply watch the videos. I hope it's going to help many of you to actually make sounder financial decisions. So this is about risk. Now, once you pick a risk level, you build a portfolio. And as you mentioned, a lot of people use what is called modern portfolio theory. What does it mean? Is that when I was talking about asset allocation at the beginning of our chat, I talked about the decision of whether to invest 10 or 15% in North American equities, and 10 or 5% in gold, and 20 or 10% in European equities, etc., etc. That's your asset allocation. So once you pick a risk level, let's say that you want to have 20% Stashaway Risk Index, you need to build a portfolio that actually target that risk level. And that is a mathematical exercise. So that's something that the app does by itself. So, it does it for you. But in theory, you could do it yourself if you are very proficient. And what modern portfolio theory says is that you use expected returns, expected volatility, and the correlation among all the elements you're going to put in your portfolio to actually build what is called an efficient portfolio, which means it's the best portfolio that gives you the highest expected returns at a specified level of risk. Now, that's the basic of modern portfolio theory. We use that logic as well. It's the core of asset allocation for the whole financial industry. What we do on top, and that's what's called ERA, economic regime-based asset allocation, which is something that kind of we develop, but we are not the only one using economic regime asset allocation in the market. Of course, there is a lot of very sophisticated hedge funds and large institutional investors that use similar logic. But ERA is something we developed and made available to everybody through the app. What in practice we do is that we actually change the asset allocation over time dynamically, looking at economic data. So as I kind of mentioned earlier, last year during the crash, we didn't touch the portfolios. But when then the markets rebounded in around May, we actually did change the portfolios. We reduced our assumption to what is called all weather, which is kind of assuming that the economy is not going to do well for some time. We reduced significantly US dollar exposure. And the reason was that the US was printing a lot of money. And so our system expected the US dollar to depreciate, to lose value, which happened. The US dollar since then lost more than 10% against Singapore dollars and the ringgit. Of course, in Dubai, that's not an issue because the dirham is pegged to the dollar.
You're almost pegged, yeah.
Yeah, exactly. So it obviously that doesn't affect Dubai investors, but it does affect people that think in pesos, even if maybe they live in Dubai now. But if they think in pesos, it does affect that. True. And so we actually were able to reduce US dollar exposure before actually US dollar lost around 10%. And this is because we just follow the rules. Like we follow the system that we've built over time. We didn't leave it to our own emotions and our own biases to make those decisions. So that's what ERA is. It's a dynamic asset allocation, systematic logic that that kind of takes economic data and makes asset allocation decision based on those data. Maybe one more, going back to risk, because I think this is incredibly important, and I see that you have a very kind of educational angle, and I think it's important we talk about it. So as I mentioned earlier, picking the right risk level is of utmost importance, because that is actually what will make it possible for you to stay the course and invest over a very long period of time, and therefore kind of really build your savings or not. And it's important that you, as mentioned, you pick the right risk level. And I mentioned one factor earlier, but really there are two things you need to take into consideration. One is your timeline. If that money is earmarked for the very long term, so that's money you don't want to touch for more than 10 years, let's say, then you can take more risk. If that's money that you may need in 2, 3, 4, 5 years, then you need to take less risk. So that's one element, how much time you have. And you need to be very honest with yourself. If you think that money, I don't need it for 10 years, you really don't need it for 10 years. You don't, it's not your emergency. You need to have another pocket, which is your emergency fund. So in case of emergency, you have your emergency fund. You don't touch this money. So it's a long-term money, right? So that's one element. When do you need the money? And the second element is what makes you sleep at night. Because even if you have a long time, maybe you don't need the money for 20 years, but if you take too much risk, when the markets crash, you're going to sell, and that's the worst thing you can do. So you need to look at these two elements and then understand what is the right risk for you. And on the StashAway app, there is a goal-based function that actually helps you through this process. But obviously, you need to kind of be honest in the assessment with yourself and just make sure you actually are comfortable with what you end up choosing.
Yeah, I actually love the goal-based app. And by the way, my wedding fund is in the 6.5%. So
makes sense. Assuming you're planning to get married in not too far away in the future, I agree with you.
Yeah, it's within the next 12 months. So, brother, if I didn't get married, you know what happened, okay? But don't worry, it's in a 6.5% risk. So I have my trust in that fund. Yeah. And so far I'm happy with what's happening. And my emergency fund is in the simple StashAway simple, which is 1.2%. What do you call this? Returns, and that is way better than the typical deposit accounts available in the market right now. So
absolutely.
You've mentioned all of this technology, and it's really great to know that you have tools and automations that are doing this automatically without much of human intervention. But what happens when let's say the market crashes, and then how do you ensure that your investors stay the course? Or I think you have, do you provide notifications or informational guidelines to help them keep investing and don't pull out their investments?
So the short answer to your question, which is, what do you do to make sure that your clients behave in the right way, which is kind of staying invested through a crash, is that you need to be prepared before that happens. And that's why we spend so much time and effort on educating clients on, on how you find the right risk level. That's why we talk about risk so prominently. And that's why we try to help clients get the right level of risk. This is the most important thing, right? Because then once the markets crash, the markets are crashing. It's too late to do anything. I mean, they don't give you notice. Like they don't say, "Oh, tomorrow I'm going to crash." They just, it's usually quite sudden. And so, there's not much you can do after it happened. You need to be prepared for that. And that goes with having the right risk level. It goes with having built a portfolio that is diversified. So maybe, equities crash, but gold goes up. And bonds goes up, and so and that helps you kind of reduce significantly your losses, which is why lower risk portfolios will actually lose less than higher risk portfolio. Higher risk will have all equities, lower risk will have a much higher percentage of bonds and gold and other protective asset classes. Then on top of this, we tend to, when the markets become a bit more volatile, we tend to increase the frequency of our communication. So we have market commentary explaining what's happening. So we just want to give people the tools to understand what's happening. And then at the end of the game, people, our clients, is their money, right? So they need to decide what to do. We give as much guidance as possible. We try to make sure they do the right thing, but at the end of the game, they are the ones making the decision. It's their money. And, one of the things in StashAway, you can click bottom, and you can withdraw the money anytime. It's not locked in any way. We have a strong belief that that's part of core proposition of, it's your money, you do whatever you want with it. We try to help you do the right thing, but then at the end of the game, ultimately it's your decision.
Yeah, and I like what you're doing here because, like what you said a while ago, there is this education tab on the app, and it's free. And I think being informed is our best weapon when the market crashes, right? And like what you said, frequent communications are very, very important to investors so that they'd stay invested. Now, let's say, okay, I'm not the guy who's investing, and I'm convinced that I will put my money in StashAway. How can I? How do you ensure that my money is safe with StashAway? I think you have um, somebody else or a bank where you put the money into and you just manage it. Am I right?
Yeah. So you are investing through StashAway, depending on the risk level, but overall you're taking market risk, meaning that if the equity markets go down, your investments will go down if you have an equity portfolio. And same thing with bond and gold, etc. With StashAway Simple being a little bit of an exception where the risk is extremely low, as close as it gets to no risk. Now, there is no StashAway risk, meaning that the money is not with StashAway. The money is what is called a custodian account. Custodian account, and we have custodian relationship with Citi and HSBC indirectly through our broker Saxon. And what it means is that the money and the securities of our clients are with Citi and HSBC, depending on the type of security and type of asset. What that means is that if for whatever reason StashAway were to disappear, which obviously we're not planning to, and we're actually being very successful, so I don't think that's something that will happen. But let's just use this as a kind of a crazy example. If StashAway were to disappear, your money will anyway be safe because it's in a custodian account. And there's nothing to do with StashAway as a company, to the point that StashAway's creditor cannot touch our client money. This is because we are, first of all, because it's the right thing to do. But secondly, we are regulated as a fund manager in all the jurisdictions where we are. So we are regulated by the MAS in Singapore. We are regulated by the DFSA in Dubai. We're regulated by the Securities Commission in Malaysia and by the FSC in Hong Kong. And what all of these regulations say is that there needs to be a clear distinction between the company money, so StashAway's money, and the client's money. And this is a core part of how the financial system works. So this is actually the same structure that you will have if you invest in any fund.
Okay. So just to be clear, the money in StashAway, is it also insured, or do they follow the insurance that are being used for banks or custodians?
No, it's not insured, but let me explain you why you don't need this to be insured. So the reason why banks have deposit insurance is that when you give money to a bank and as in a saving account, that money, the bank takes the money and then gives it to somebody else. If somebody comes and get a mortgage, the bank will give your money, your one. Imagine this is actually a $100 bill. They take your $100 bill and they give it to somebody that is taking a mortgage, right? So if the bank goes bankrupt, you will not see the money because the money is nowhere. The money is in a mortgage somewhere. So if the guy doesn't pay the mortgage back and the bank goes back and you want the money back, the bank doesn't have the money, right?
Yeah.
That's why there is deposit insurance in every country in the world, because the governments or the central banks don't want what is called the run on the bank. They don't want all the depositors to go to the bank and pull the money at the same time, because that will bankrupt the banks. And so that's why they say, don't worry, if that happens, the government steps in with insurance and actually will cover that. In a fund case, or in our case, your money is actually not given away, it's actually invested. So if tomorrow all of our clients at the same time withdraw, it's not a problem. It's not a problem. We actually have that. So that's why there's no deposit insurance on funds, because the money is there. It's nowhere. It's not lended somewhere else.
Yeah. Okay, I see. That's why. So I mean, money. Just to be clear, money. The money that you invest in StashAway is not with StashAway. It's with a custodian. Okay.
It's a custodian, and it goes into whatever investment you've chosen. Yeah.
Yes. Now, I have some friends who's based outside of the UAE. let's say in Qatar, in Italy, and in Saudi Arabia or in UK, can they also invest in StashAway even if it's not in their local countries? Or
They
let's be
can.
very specific. If they're in the Philippines, can they still use StashAway?
They can. So from the Philippines, they can do it in Singapore. But to be frank, the experience is not optimized, meaning that they need to send the money to Singapore, right? We don't have a Filipino bank account to actually receive the money. And we know we're going to show the money. If you open the Singapore app, you will see money in Singapore dollars and US dollars. You're not going to see it in Filipino in pesos. So it's possible, but obviously it's not optimized for somebody living in the Philippines. For people living in kind of a GCC countries, they can do it in Dubai. Likewise, it's not completely optimized, meaning that they will need to actually send the money to our Dubai bank account.
Okay. Now, I think this question is really one of the things that many Filipinos are asking. Since you have already expanded in Hong Kong recently and Dubai, it's just within the first 12 months. When are you going to the Philippines to expand? Because I personally think this is something that many Filipinos would benefit from. What do we call this? There's one investment program wherein Filipinos can invest as low as 50 pesos, and I think it's very similar, but I still think StashAway is better than the one. So when are you going to the Philippines? That's the
Look,
question.
I don't have an answer to the question, meaning it's not something we're going to do in the very short term. But never say never, and it's we'll keep looking at it. Right now we are already in 4.5 countries, meaning that we are actually about to launch Thailand as well, which is going to be our 5th country, and that makes our hands quite full. But definitely we will keep look at the Philippines, and maybe one day we'll launch there. I don't have a date.
Yeah. And once that happens, I'll be the first person to announce in the community.
Thank you. I appreciate that.
Yes. Now, since my program is, and by the way, before anything else, do you think there's one very important question that I didn't ask of you today? If there's one thing that you think I should have asked, what should that be?
Let me think about it. We talked about risk, which is very important. We talked about dollar cost averaging and diversification, which is very important. We talked about Academy briefly. So again, maybe I'll mention that again. If anybody wants simply to learn more about financial planning and investing, download the app, and there is a tab called Academy where you actually, I think, going to learn a lot, especially if you are kind of a newbie to investing. But also, there's also some advanced topics. So we actually have our chief investment officer, Freddie, my co-founder, has also posted his full educational content on asset allocation, and that goes quite deep. So also for more advanced investors, I think that's quite interesting. So that's very important. I think education and StashAway Academy is very important. What else we talked about? No, I think we talked about quite all the important things.
Yeah, and with all the benefits or the advantages of Robo-Advisory and StashAway, do you see any disadvantage of this technology?
No, I don't. Look, I'll be very frank with you. All of my personal financial investments are with StashAway. So I really put my money where my mouth is, and I strongly believe that this is the right thing to do for my savings, and therefore for the savings of my clients. What I usually do when we think about a new product is I actually test it for myself, and if I think it's good enough for me, then I kind of give green light. And so I am very, 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 very convinced that this is the right thing to do for everyone. To be honest, people that have $1,000 and people that have $10 million and everything in between.
Yes, perfect. Yes, and that's what that's what also that is also what I'm doing before I invite a person in or promote any kind of investment scheme or vehicle. I make sure that I try it first. And StashAway is one thing that I've used for the past couple of months now, and I'm really happy with what's happening with how simple it is. And Alan mentioned here that for people investing outside UAE or Singapore, they can do it on a quarterly basis or semi-annually just to lower the transfer costs. Great strategy.
Yeah, that's a fair point of view. Yeah.
Yes. And since my program, Michele, is about purpose-driven finance, this is the question that I always ask my guests. How do you want to be remembered in terms of how you use your money?
in terms of how I use my money, personal.
Or with all the achievements and accomplishments that you've had.
Look, I have a clear purpose in what I've been doing for the last 4.5 years, and it's been a lot of work, and ahead of me there is a lot of more work, and that's that. I really think that helping people manage their savings better and helping people achieve what I call financial peace of mind, meaning being in a stage where money is not a source of stress, but rather a source of peace of mind. I think it's very fulfilling to me. It's a topic very close to my heart. It's very important for me. As I mentioned earlier, I have 3 kids, and therefore, I feel my personal responsibility toward them for my money, and I project that to our clients, and I just want to make sure that we help people do the right thing and get to 50, 55, 60, 65 years with enough financial means to live a happy retirement and not to be too worried about where I'm gonna eat next week or when I'm gonna sleep next month or what happens if I live too long, and which is in theory a potential problem. So yeah, I think just helping people achieve financial peace of mind is probably the summary answer to your question.
Yeah, and I'm with you with that question, with that mission that you have, and my support is with you and StashAway. And because of that, I'll just give a quick slow clap about it. And Michele, where can we reach you? Or how can they get through StashAway? How can they learn more about it? I think you have a website for the UAE. It's stashaway.ae.
Yes.
And invite them to download the app.
Yeah, so there is the Stashaway.ae. You can just go to the App Store or the Android or iOS and download Stashaway. And if you, in the app, you actually have a WhatsApp button. You can WhatsApp with our customer support team if you have any questions. If you prefer emails, on the website, you'll find the emails. Anyway, it's support@stashaway.sg for Singapore and support@stashaway.ae for the Middle East. But I guess the easiest way is just to download the app and use WhatsApp.
Yeah, true. And how can they reach you, by the way, if they wanna ask you? I think you have a lot of followers on LinkedIn, like 20,000 plus. And
yeah, so the best way to reach me, to be honest, is actually through our support team, because unfortunately, the volume of things I receive is just unmanageable for me directly. So I think the best way is just go through support.
All right. Well, that wraps our episode for tonight. I hope you guys gained a lot of wisdom from Michele, and I hope you learned so much about Robo-Advisory and also, most importantly, on StashAway. If you missed the entire live session, you can listen to this on my Pera and Purpose podcast through Spotify, Anchor, and Apple Podcast. And don't forget to follow Purpose Driven Finance on Facebook, YouTube, and LinkedIn. And definitely don't forget to download StashAway right after this episode. Once again, this is Kuya Jay, together with Michele, telling you to prosper with a purpose. See you next week.
Thank you.
Thank you, Michele.
Thank you.